Hello, welcome to FundForum Asia 2017. I'm Sarah Clarke, coming to you from the JW Marriott Hotel in Hong Kong. It's been another day of great discussion and covering a number of key issues, and here for our live panel discussion to explore some of these issues are our three panellists. I'll start with Richard Harris from Port Shelter Investment Management. Thank you.
Pleasure.
Eleanor Wan, CEO of BEA Union Investment.
Hi.
Lennie Lim from Legg Global Asset Management. Thank you all three of you for joining us. Okay, on day three, there was a focus on investment strategy for active asset management and the market in Asia. Has it delivered? That's the key question. As a service, what is the value of asset management? I'll go straight to you, Richard. What's the value? Why should I go back to the asset management industry and invest?
Well, investment hasn't gone away. It will always be here. I mean, my daughter maybe unwisely has decided to go into the industry, as an asset manager, and I was slightly worried for her, but I take some comfort in the fact that the industry will always be there. It may well be that a lot of the things that we were used to when we were in the early stages of our career will be totally different. But investment is still there. There will still be people needing to have their money managed. It's not going to go away.
Some may suggest, though, that the likes of the asset management industry, where you're paying high fees only to get a small return. So what's the incentive, Eleanor?
Well, I've always have one belief in my profession is we are a professional industry. Professionalism is something the client needs from us. Of course, they can invest for themselves, but I think we have a full process. We have people to really go into the company to ask for the question directly to the management of those companies before we invest. So I think this is different from a retail investor just buy a stock. Professionalism and the trust on us is something I'm still believe that clients is looking after for us.
Okay, Lennie, is it a scenario where you've got an increasingly competitive field to try and secure that investor and keep or differentiate yourself from your competitor?
I think at the end of the day, it's about delivering returns, right? So to me, that's the key part that you need to have within this industry. Thereafter, in terms of differentiation, I think within our firm, we believe in a couple of things. One is in terms of having scale, and I think that's where when we come together from a multi-affiliate model, our different investment firms, we have 9 different investment firms within Legg, and I think that's where we are able to sort of have scale in this very price competitive kind of industry. And then on the other end, the reason why we have 9 different managers is that each of them are specialists within the different asset class that they do. So it's having both sides in terms of having scale at one end, and yet to be able to be very specialized in terms of what they do.
Can I come back on that issue about high fees? I mean, we hear a lot about active management, high fees. Well, they're not that high. And of course, at times, fees have been high. But let's face it, even if you're paying 2%, that's not high for the kind of services you are getting. People go and see their doctor, people go and see their lawyer, quite happy to pay that. Why is it that investment management has to be free? And I think that what's happened is there's been an extraordinary propaganda campaign fought by the passive funds saying active management, high fees. Well, passive funds have their fees too, and we know that passive funds will never outperform the index. So I think that what we're likely to see is continued pressure on fees, but I rather suspect that this high fee argument is going to also bite passive fund managers in the future because their fees will be under pressure as well, and that's just not healthy for any industry.
So is there room for both? To both successfully be there, the passive and the active?
Yes.
So I think our perspective is that it's going to be not a question of active versus passive, it's more active and passive. So I think where our clients are more concerned about is the kind of investments they are in, as well as how do you go about combining different types of investments, be it active or passive, in terms of coming out with a solution for them.
Would you agree there's a lot of talk about the industry needing to reinvent itself, or is that just the wrong impression that I'm getting? Is there this need to reshift and kind of, to change the landscape? Is the industry doing that?
Well, it depends on what you talk about change. Every day we face the word change, and we keep changing. In a nutshell, what we offer is a very invisible solution to a client, which is investment product. And what they are coming for us are returns or performance. But I think it's more importantly is to map their expectation versus what we deliver. A lot of the time, I have to say, investors do not, well, I'm just talking about some of the majority group here, is that they do not know what they are exactly investing. And the expectation it varies a lot of the time. And they come to us with a set of wrong expectation. So I think we need to have more communications with our client to make information more transparent. Let them understand what we are doing is very important. At the end of the day, they need professional advisors or solutions like us for a better outcome, no matter whether it is for retirement, for children education, or any other objective. But I think it is a serious topic.
Okay.
And I think change is part and parcel of this industry. I think the key point is that this industry is very dynamic. Change doesn't mean it's bad. Change actually can mean good. If anything, within the investment side, we look for such opportunities to be on the right side of change. And if you sort of encase that within the Asian context, Asia markets are extremely dynamic versus the other region.
Yeah, but I think what's happened to change is a lot of it's been forced on us by technology. And unlike any other industry, you've got industries like Uber, which has been a disruptor. Amazon was a disruptor in their own industries. We haven't really had that. There's no real disruptor. There are some products like ETFs maybe have come through, but there's no company that's come through as a disruptor. What's happened, I think, in this case is that technology has been utilized by the main competitors who are under price pressure to reduce their costs. Therefore, we've seen much bigger units, much bigger companies, and a lot of small fringe people have been squeezed out.
I see the biggest change in the industry is the regulation. It got much tighter regulation than it was, 10, 20 years ago. And then the changes keep on. We have to do more.
But the regulation side of things, I suppose that's from the industry perspective, or I should say from me being an investor, I would see the regulation as a good thing. Is that what the industry is seeing in this, or is it a scenario where it's too heavy-handed?
No, but you have to keep in mind, Asia is not a monolith. It's unlike US or Japan where it's one single market. Asia is like Europe where it encompasses many countries, each having its own regulator, its own culture, in many instances its own language. So that's the complexity involved in terms of doing business here. And as and when you have increased regulation across a number of countries, that will also lead to more costs to our business.
And it's also true, I think, in Asia and even more in Europe, that the fund industry has been isolated as an industry to be heavily regulated. There are many, many other aspects of investment that are very lightly regulated. You can buy a share. Be more risky to buy one single share, much less regulated than a fund. So I think we've seen over-regulation, certainly in terms of the core fund product, and maybe a lot less regulation in other areas of the financial services industry.
Okay, I want to get to the second part of the discussion point, which is who is the customer? Who is the customer of tomorrow? And given we are sitting here in Hong Kong, we're discussing the region, who is it in this region?
For me, I always see that I see very closely is China is becoming more and more important, both in the capital market development as well as where the money is coming. The economy has been keep growing, although we say that the GDP has been reduced more significantly now just to around growth of 6.5%, but nevertheless it's still a very high growth number. I see that China is providing a very good market for us to invest into, because it is keep opening up. The other side is that the growth of the middle income group provides us a very good base of client that we are going for.
Okay, Lennie, what does a customer want here in terms of product? Is it a different from, say, what you'd expect here than what the customer might want in Europe?
All right, I think to answer your question and to build on what Eleanor has said, when you look at markets like China, the demographics sort of tells you what you're going to need in the future. Meaning this, it's a fast aging population, right? China is one-child policy. And if you are looking in terms of the retirement needs of the individual, it's better for them to be saving now when most of the population is economically active. And so that's exactly the kind of things that you really need to put in place in terms of planning for their retirement, what type of investment products, so that over time you can then sort of take advantage of your investments to fund that retirement.
You mentioned investment, in investing for goals as opposed to benchmarks. Is this the kind of scenario, like investing for your child's school education?
Correct. So in many instances, and you have seen many studies that were presented today, outcome-oriented solutions is now beating the traditional type of asset allocation benchmark-driven type of goalpost that we're so used to. If anything, the customer of today, they like choice, right? And they are more able to express to you their needs, and it's more about on our part, on our responsibility in terms of then developing products that are then able to cater to that specific goal or that specific need, right? So it might be saving for a child's university education, it might be saving for your retirement, it might be saving towards buying a new house.
Okay, what about the market? And Richard, I'll come to you. Does the foreign market understand the Chinese customer, the market, or is it a complicated one, and are they, is it mismatched? Are they meeting the demands of the investor in China?
Well, I think what's happened is many of the big firms now have well-established Asian groups who do understand the Chinese customer. But it is interesting when you see people come out from Europe, they have no real focus on what customers are like here. We saw a presentation earlier today where the expectations of investors were pretty well double digits. Now, we all know with interest rates at the levels they are, that's a pipe dream, it's not going to happen, but investors expect that. And the danger, of course, is when investors expect that, if people say, oh yes, we can do that, then you get all sorts of problems happening in the market. But I think what people from Europe don't really appreciate is that it's mainly a retail or individual driven market. We don't have a pension fund industry as such like you have in Australia or Europe or the US. That also restricts investment managers too in the kind of products they have and the kind of things that they can offer.
It's a very different culture, I have to say. The Western world, they have much better history, track record on investments. In Asia, not to talk about China, which is really a newcomer to the picture, our expectation is very different. We do not have a very sophisticated or well-established pension system that we can rest with, and that's why expectation is very different. I have to say, culture makes a very big difference between the Western world to the East.
And you mentioned also before, it's a developing market, isn't it?
Correct. And I couldn't agree more. I think if you look at the culture of Asians, especially the Chinese, there's a very strong savings culture, right, versus the West. And I think that breeds well in terms of saving for a retirement and making sure that it's well invested. The second part about China, which is I think is very interesting, is that you see a very, very deep penetration of technology, especially things like smartphones. So right now, I think China has leapfrogged the rest of the world in terms of the adoption of smartphones. And they are transacting everything through their smartphones. You know, I mentioned earlier in one of the panels is that within China, people rather lose their wallet than their smartphones because they are transacting so much more using their smartphones than they could ever do with their wallets.
Then life is on their phone.
Correct.
I just want to mention one more thing about Asia is that Asia, we always emphasize, Asia is different from Europe in a way that it is very fragmented. Just the most sophisticated economies between Hong Kong and Singapore, we see a lot of differences on our expectation. So not to talk about some of the developing economies like China or even Thailand, you know, they are developing, and so expectation is very different. So with the global firms, I think what they're doing, and that's why we are in the industry, is that they're having their presence here to serve the local customers. So I think it is, sometimes we always argue that you cannot commoditize it because the expectation, the need is very different.
Okay, look, I think that's about all we've got time for. So thank you very much to our panellists for today's discussion.
Our pleasure.
Thank you very much.
If you'd like to see this panel discussion again, or if you'd like to watch more conversations, you can go to Twitter and look for our active feed, which is @FundForum, or look for the hashtag FFAsia. Thanks very much for joining us.
Thank you.
Thank you.